Good afternoon, everyone. Welcome to our Spring Home Buying Forum. This is day 3, and today we're going to talk to you about the home buying process. And it's so great to have you here today. My name is Dominique Velger. I'm the Community Engagement Specialist standing by our panelists, and one of them is Ryan Douglas. He is our Mortgage Loan Originator. I'm going to talk to you a little bit about Ryan's background. Ryan has been an employee at HUECU for about 8 years. He's dedicated to providing excellent service to our members. In 2020, Ryan joined HUECU's mortgage department, where he has continued to provide his excellent service to members of the Harvard community as they achieve their home buying ownership. He enjoys taking the time to educate and work with his members closely to make the mortgage process and route to becoming a homeowner very seamless. Ryan?
Hi, everybody. Thank you so much for joining us on day 3. We have a great presentation for you today. I'm going to be in the chat answering any questions you have, and we'll save some for the end for the live. But you're in great hands today with Daisy and Michael. And, thank you very much again for joining us.
All right, but before we get started, we have some rules we want to talk to you about. First, we are going to reduce all of the background noises, and please use the Q&A. Like if you're going to be full with a lot of information, so we want you to use the Q&A, ask the questions, and we are going to answer them for you. And this presentation is being recorded, so once it's completed, we will have it on our YouTube channel at My HUECU, and we will also have the other ones from yesterday as well as Tuesday. And we are also going to have a survey at the end, so you can let us know how we did and what we can do better. And don't forget, we have some prizes for you. Yes, we do. We have some swag. So just for participating here today, we're going to unanimously pick out names, and then you'll get some swag from HUECU. But first, I want to talk to you about the community Harvard Credit Union. So we are not for profit. We operate just like a bank. We have lots of different products. We have checkings, we have savings, we have CDs, we have loans, obviously. And you can access us anywhere. You can go online, you can visit any of our branches. And we just really work for you, our members. And speaking of branches, we have a brand new branch that opened a couple of weeks, well, not weeks, several months ago. It's at the Longwood Medical area. It's near the Beth Israel West Campus, right underneath the Joslin Diabetes Center on that same block where you have the Sweet Green. So if you're in that area, please stop by, say hi. We'd love to see your beautiful faces. And like I said, this is the 3rd day. The first day, we had a lot of different market trends. Yesterday, we had tips from an attorney and a home inspector. Today, we're going to take you through the process. And tomorrow, we are going to also talk to you about the affordable path to home ownership, because there are so many different variables out there. So we want to make sure we arm you with all of the information that you need to get started. And now today, we are going to meet our presenters. First, Daisy Familia. She has over 2 decades of assisting members with the credit union industry in achieving their financial dreams. Now, as a senior mortgage loan originator, here we call them MLOs, she has been committed to empowering her clients with the knowledge they need to make confident decisions when funding their financial goals. With her vast 20+ years of experience, Daisy is a trusted expert in the mortgage industry who can guide you through the complex world of mortgage loans and make your financial dreams a reality. We also have with us Michael Levine. Now, Michael has been with HUECU since 2006 and has over 40 years experience in the financial services industry. Now, as a licensed loan originator, he spends much of his time responding to mortgage inquiries, meeting with prospective applicants, and working with the marketing department to coordinate first-time homebuyer educational programs. And today we're going to talk to you about that home buying journey. We'll just walk you through all the process of home buying, mortgage qualification. We'll guide you through what you need to do from A to Z and what the next steps are. So I'm going to toss it over to Daisy to get us started.
Thank you, Dominique. Hi, everyone. Thank you for taking time out of your schedules to come to this home buying forum. We hope that all the information we will be providing here today is of help to you. Let's dive in. Next slide, please. Thank you. Can we go back one more? Thanks. You might be wondering what makes financing with HUECU different from other lenders. At HUECU, we are not just focused on completing a transaction, but we aim to build a long-term relationship with our members. We pride ourselves on providing personalized service, and we work hard to ensure that your experience with us is smooth and as stress-free as possible. We offer competitive rates, and we also have rate discounts for first-time home buyers. Our closing fees are transparent and reasonable, and we also offer a fully digital process, making it easier for you to complete the mortgage transaction without having to leave your home. Most of our members appreciate the personal interactions we offer. We have regular office hours, and we are happy to meet with you outside of the standard business hours. We can also interact with you via phone calls, in person, or video conference, just like we're doing today via Zoom. Most of our clients offer a hybrid model of communication, which allows for a flexible, convenient approach to interacting with us. At the moment, we service all of our mortgage loans. You might be wondering what this means for you and why it matters. Well, in the mortgage market, it is standard for mortgage and or for the servicing of the mortgages to get sold to investors shortly after closing. These investors could either be other financial institutions or government-sponsored enterprises, such as Fannie Mae, Freddie Mac, Mass Housing, or the Federal Housing Administration, FHA. If your mortgage loan, along with the servicing, is sold to another financial institution, you will be dealing with that new institution, including making payments to them. And as part of the transfer process, a few potential issues could arise. First, there could be confusions with regards to actually making your mortgage payment. Second, the new servicer may be more messy or not as thorough as your previous one. And also, some of the features that you had with your previous servicer, such as online account access or paperless statements, may no longer be available. And third, it could also be bad timing. Let's say that you are trying to use your property as collateral to obtain another loan. It could be refinancing or a home equity. A lot of times, the other lender that's trying to give you the new loan may need information from your previous lender. And if that previous lender has sold your mortgage and the transaction, basically the transfer is in transition, you may not be able to get the documentation that you need. However, if your loan is sold, but not you, basically your existing lender continues to retain the servicing, which is what happens at HUECU, there will not be an impact to you as a mortgage holder. This is something that will happen behind the scenes, and you would still be dealing with your current lender for all aspects related to the management of your mortgage account. At HUECU, everything we do goes back to having your best interests at heart and wanting to build a relationship with you. Next slide, please. The current real estate temperature. If you missed day one, I recommend that you look at the video and get the helpful information and tips that Realtor Dino and Appraiser Kim provided. Currently, we are in a unique real estate market where interest rates are high and home prices are slowly but surely pushing down. Some experts are calling this market a you date the interest rate and marry the house sort of market. And what this means to you is that if you find a property at a reasonable price that checks most of your boxes, then it is a good idea for you to buy it, especially if you are currently renting. Why? Because as soon as the interest rate goes down, which is a matter of if, not when, and as long as your property has sufficient value, you can refinance your mortgage to get a lower interest rate, and in turn, lower your monthly mortgage payment. The housing inventory is trending low, and there are a few reasons for this. First, there are not enough new homes being built to meet the ever-growing demand. Second, a lot of homeowners, such as baby boomers, have been forced to stay in their homes and forgo downsizing because of the high cost of living. And third, many investors are buying lower cost properties in cash to rent or flip, because they know that if needed, they will be able to refinance that property once rates get lower to recoup the capital they originally invested. Location is still a significant factor when it comes to the real estate market. And although we are still in a bit of a transition between this being a seller's and buyer's market, depending on location, there may be many fantastic opportunities for buyers right now. As of recent, I have seen an increase in offers that are accepted at asking or slightly below the asking price, even with lower down payments, which was not the case a few years back. And seller concessions are making a comeback. A seller concession is when the seller also pays for the buyer's or the borrower's closing costs as an incentive to close a deal. None of which was the case in 2020, 2021, when the rates were much lower than they are now. Next slide, please. Where do I start? When it comes to purchasing a home, can we go to the next slide? Many of my clients that I have spoken with usually start by browsing online on sites like Redfin, Zillow, Realtor.com to look at properties. However, I strongly recommend that you start by contacting the lender first, such as HUECU, to find out how much you may qualify for. Why waste your time looking for properties that might not be within your price range? At HUECU, we offer both pre-qualification and pre-approval services. While many people use these two terms interchangeably, these terms refer to two different things. A pre-qualification is essentially a verbal conversation that we have with you to give you a general idea of how much you may be qualified for based on what you tell us about your financial situation. On the other hand, a pre-approval is a formal process that involves us taking a deeper look into your finances, including your assets, income, and credit history, resulting in a letter that depicts your intended purchase price, your intended down payment amount, and your intended loan terms. And this letter also confirms the specific amount you may be pre-qualified for. With a pre-approval letter, you are able to make an offer on a property. And usually this is what, when you first meet with an agent, they will be asking you how much you are pre-approved for, because they don't want to show you properties that are much higher than what you can afford. At HUECU, a pre-approval is valid for 90 days and is completely free. If you do not find a property within those 90 days, you can renew the pre-approval, or if you prefer, you can take a break from looking at properties and renew the pre-approval once you're ready to resume your search for a home. A good rule of thumb is that if you're planning to buy a home within 6 months or sooner, going for a pre-approval is your best option or your best bet. Because this way you get a more accurate understanding of how much you can afford to purchase a property for. However, if you are, let's say, a year, 18 months or more away from purchasing a property, or you're not quite ready for the pre-approval, then a pre-qualification is perfectly fine as well. Essentially, we're going to be also looking at your credit. Credit is one of the most important criteria that your lender, including HUECU, will be looking at in order to determine how much you may be able to qualify for, and essentially how trustworthy you might be as a borrower. In the mortgage industry, we typically look for a score of at least 620. However, the higher your credit score is, the better off you will be in terms of the overall cost of your mortgage. During the pre-qualification process, your lender, including HUECU, will very likely ask you to obtain an unofficial copy of your credit report and your credit score. You can typically easily obtain a copy of your credit report and a rough estimate of your credit score from a free service such as Credit Karma. or even one of your credit card companies, including if you have a credit card with HUECU. And while this will give you a general idea of your credit worthiness, it is important to know that in the mortgage industry, lenders usually use a specific credit score model from the three major credit bureaus, Equifax, TransUnion, and Experian. What this means to you is that if you decide to move forward with a pre-approval, your chosen lender, including HUECU, will use the credit scoring model that basically is accurate for the mortgage application, which will provide a more concrete idea of your credit worthiness. Your chosen lender is also going to be looking at your down payment. A down payment is the amount of money you will be paying upfront towards the purchase of your home. It is important to have a good idea of how much you can afford to put as a down payment, as this will affect your mortgage payment and overall affordability. Coming up with a down payment to purchase a home is one of the biggest challenges first-time home buyers might face. This is especially true in areas where home prices are high, and it can be difficult to save up enough money to come up with a down payment. The good news is that every year, government-sponsored entities, Fannie Mae and Freddie Mac, set the standard for the mortgage industry, including the highest loan amount that can be borrowed with a down payment as low as 3%. This year, the limit is $726,200, which is significantly higher than last year's limit of $647,200. For example, let's say that you are interested in purchasing a home for $725,000. With a down payment of $25,000, you could make that happen. Of course, there are other price points available, and some first-time homebuyers may have between 5% and 10% save up for a down payment. Keep in mind that if you are putting less than 20% down payment, essentially 20% of the purchase price or appraised value, whichever is lower, you will likely have to pay what is called private mortgage insurance, PMI. PMI comes with an additional monthly payment. And the sole purpose of PMI is to provide insurance to the lender in case you do not make the payment. If the loan has PMI and you start making the payment, then whatever the lender loaned to you, they could recoup that money back. The amount you pay for PMI depends on your credit score, how far away you are from 20% down payment, and your debt to income ratio. For example, with a purchase price of approximately $725,000, you will have a $25,000 down payment. Your loan amount will be approximately $700,000. If your credit score is, let's say, 720 points, your PMI payment will be around $373 per month. However, if your score is 740 with the same purchase price of $725 and same down payment of $25,000, your PMI obligation would decrease to be around $292 per month. That's a difference of a little over $80 per month in savings for just having 20 points higher in your credit score. I know that a down payment of $25,000 might seem like a lot, but with that down payment of $25,000, you are purchasing an asset that is valued at $725,000. In addition, the housing market has grown at a rapid pace within the past 10 years. And while it may not continue to grow as rapidly, it is still expected to grow in the single digits in the coming years. When it comes to mortgage products, I'm very excited to share some information of our unique mortgage product offering that may be a great fit for your needs. One program that we offer, and we have recently revamped this program, is a medical professional mortgage. And so if you are a doctor, dentist, resident, or medical fellow, you may qualify for a medical professional mortgage at HUECU. Unlike a traditional mortgage, this loan program is designed to help medical professionals buy a home. With this mortgage product, you may be able to have the option of putting a low down payment as low as 3% and also potentially avoiding the need for private mortgage insurance, making it easier for you to purchase a home. Another program that we offer is called Home Ready. This program is designed for individuals with low to moderate income, depending on the area, and include additional flexibility to help make home ownership more accessible for qualified applicants. If you qualify for either of these programs, we would love to talk to you about it. In addition to our medical professional mortgage and our Home Ready program, we also offer multifamily home financing. Our adjustable rate mortgage products allows you to purchase a 2-family home with a down payment as low as 5%, which is a great option for those looking to generate additional income from rental units. We are proud to also finance homes in all of New England. With remote work becoming more common, many people are considering moving to places like Portland, Maine, Vermont, and other areas. So even if you relocate to one of these areas, you can still finance your new home with HUECU. For those looking to purchase a more expensive home, we also offer jumbo loans. A jumbo loan is a loan that exceeds the limit set by secondary market. In certain areas, like the Boston metropolitan area, you can borrow up to $828,000 with just a 5% down payment without it being considered a jumbo loan. We offer jumbo loans up to $1 million with a down payment as low as 5% down payment, or up to $1,499,000 with a down payment of just 10%. During our pre-qualification conversation or during the pre-approval process, we will review all of these options with you to help you determine which program is the best fit for your unique situation. It is important to know that while during this presentation, we have been mainly focusing on owner-occupied primary residence, we also offer loans to finance vacation, second homes, and investment properties. As part of the mortgage process, we're also going to be looking at income and assets. So as you begin discussing mortgage options, there are a few things that you and the lender you choose, even if this lender is HUECU, will need to be considering. And that is your income and assets. At HUECU, we have a guideline in place where we don't want your monthly payments, including your proposed housing payments of principal, interest, property taxes, PMI, condo fee, homeowners insurance, plus anything that shows on your credit. So any minimum payments for credit cards you do not pay off every month, or any minimum payments for vehicle loans, personal loan, etc. Whatever the total sum of those payments are per month, we like to see it that those payments do not exceed 43% of your monthly income before taxes and deductions. It's essential for you to do a budget to ensure that you can afford your mortgage payment. Additionally, if you would like to use overtime or bonus income, amongst other sources of income, we require that you have been receiving that income from the same employer for a minimum of 2 consecutive years. If you have a second job, you must be able to prove that you have been able to concurrently work at 2 employers for a minimum of 24 months before we are able to include that income in your mortgage qualification. If you are self-employed or work for, let's say, Uber, Lyft, or Grubhub, we need to see that this income is reported on your federal tax returns for the 2 most recent consecutive years to be able to include that income in your income assessment. I also want to touch on a critical area that may come up during the pre-approval process, and this is student loans. It is vital to have this discussion as early as possible, because depending on what is going to happen after the forbearance period, a lot of student loans have been in forbearance, like a COVID-related forbearance for the past couple of years, and that deferral status is set to expire in June 2023. Typically, if there are student loans present, we need to confirm how you're going to be making those payments after any forbearance period has ended? Are you going to be making those payments based on a regular payment, or are you going to be making payments based on an income-driven repayment? Typically, we use, if you're going to be making it on an income-driven repayment, we will use whatever the minimum payment is. Otherwise, if there is a balance for student loans showing on your credit, we will typically use, and there's no payment showing, we typically will use 1% of the outstanding principal balance as a payment when calculating how much you may be able to obtain a mortgage for. We also do not recommend that you take on new debt while you're looking to buy a home. It is best to avoid making significant purchases or apply for new credit while you're in the process of securing a mortgage, because that could affect basically how much of a mortgage you may be able to qualify for. We understand that the entire mortgage process can be really overwhelming, but please know that we are here to help you every step of the way. And we will work alongside you to find the best mortgage solution that best fits your needs. Please continue to write your questions in the chat, or feel free to reach out to one of the mortgage experts privately. You can send an email or schedule an appointment with Mike, Ryan, or myself, or tomorrow we'll have Sharon and Helen. With any one of us, we're happy to help. Next slide, please. So as a member of HUECU, you have access to some great benefits, including our partnership with GreenPath. The licensed counselor at GreenPath can provide you with a credit report review or a budget review. I highly recommend you take advantage of this benefit. Many of my clients, when we first have a conversation, like at the initial conversation, they are surprised by what they qualify for or what they can afford when we start discussing mortgage options. Some are shocked to learn that they qualify for way more than they were expecting. And for others, it's a complete opposite. They're shocked to learn that they don't qualify for a higher loan amount. A lot of times the culprit is that even though they may have an excellent income, their monthly obligations are way higher than their income is. This is why it is important to ensure that your monthly housing payment is something that you're comfortable with, and that this payment will not severely curtail your desired lifestyle. Do you still want to take vacations? Do you still want to be contributing to your retirement, etc.? One way to determine whether you will be comfortable with your monthly housing payment is by keeping in mind what you are paying now for rent. Is this amount comfortable for you, or do you want to have a lower amount? The team at GreenPath can help you determine what will be comfortable for you as a housing payment based on your expenses and any future goals that you may have. GreenPath is a great resource to help you understand what you can afford and what your options are. And the best part is that the service is completely free for all of our members. Next slide, please. Now that we have discussed your budget and mortgage options, it is time to start discussing assembling your team. When you're looking for a lender, it is crucial to find one with a good product menu, and also a lender that's going to be there, that is reputable and is going to be available to help you. While we offer a variety of products, we understand that we may not have everything you need. And if that is the case, we are happy to refer you to another lender and let you know where to go to find a product that meets your needs. In addition to a good product menu, you want a mortgage loan originator that is available when you need them the most, and someone that can provide you with an excellent service. We understand that the mortgage process can be very overwhelming, so it is essential to have a mortgage loan originator who is knowledgeable, responsive, and available to answer your questions. At HUECU, we pride ourselves on our commitment to exceptional service. As a mortgage loan originator, we are available to help you through every step of the mortgage process, and we are dedicated to finding the best mortgage solution for your unique needs. We work with you to understand your goals answer your questions, and provide you with the support that you need to make informed decisions. The next step will be finding an agent, and you want to find a dedicated buyer's agent. As you move forward in the home buying process, it is crucial that you have a good relationship with a realtor. Please be cautious when choosing a realtor, because a wrong realtor can not only cost you a lot of money on the transaction, but it can also be the difference on whether you get the right home for your needs at the right price. Please follow your gut and advocate for yourself. And do your own due diligence to find a realtor who works in the communities that you are interested in buying a property. Someone who is responsive, experienced, and someone who works as a realtor full-time is a great outcome for you. Talk to your colleagues, friends, and even us, as we have a lot of experience with a lot of home purchases, and we can help guide you in the right direction. When interviewing a potential realtor, be sure to ask questions about their experience, such as how many deals have they done in the past year and what communities they have worked in. Once you identify a buyer's realtor that you wish to work with, you will also sign a legally binding contract with them, and they will act as your agent if you buy a home within a set agreed upon timeframe. It is essential to do your research up front to ensure that you have the right fit for your needs. A good realtor will know how to make an offer, understand the market, and will also provide you with analysis of the areas you're interested in buying a property in. They can also help you get into the property sooner and potentially even find off-the-market listings for you to look at. A buyer's realtor is an integral part of your team and can help alleviate some of the stress of the home buying process. The commission for your realtor and the seller's realtor is typically paid by the seller, not by you. And it is important to remember that the buyer's realtor, that their job is to sell you a property. And as such, you need to also have someone on your corner who can also look out for your best interests. Let's say if a realtor tells you that the property will sell for over asking, come back to us and we can help you determine what it will look like if you bid on the property for a price that's over the asking price. And what will happen if the appraisal comes in lower than desired. I cannot stress enough on how important it is to select the right buyer's realtor for your needs. The next step in the process will be an attorney. So as you move forward with your home buying process, it is important to remember that you will also need to work with an attorney. Ultimately, the attorney you choose will be an important part of your team. And you want to make sure that you trust the attorney that you're working with. At HUECU, we work with a variety of attorneys, including Sarah Ricardellis, yesterday's presenter, who adhere to our requirements for transparent closing fees. Your realtor will also most likely also have a list of attorneys that they work with. And so if you trust your lender and your realtor, your selection for an attorney should be super easy. However, it is still essential to make sure that the fees and costs associated with the attorney are clearly outlined before you agree to work with the attorney. The cost of negotiating the purchase and sales agreement contract is outside of the closing fees. And while some attorneys charge a nominal fee for the service, we have some attorneys who also will waive the fee depending on how much work is involved in the transaction. We encourage our borrowers to not get overcharged. And so if you find an attorney whose fees are lower than what we have initially roughly estimated on your transaction, please rest assured that we will use the lower fees. Next slide, please. So when it comes to purchasing a property, location is key. Sometimes it is better to invest in a fixer-upper that is in a good location than to buy a beautiful property that is in a not so ideal location. If you have children or plan to have children in the near future, school districts are very important as well. So please visit the Massachusetts State Department of Education website or read articles in the Boston Magazine to get an idea of the best school district in the area. Commuting is another factor to consider. Check out the MBTA website to get an idea of a rough estimate of the time that it would take for you to get to your job or the best routes for you to take to make your commute easier. When working with a realtor, please be sure to communicate your priorities and what you're looking for in a home. You may not be able to find everything on your wish list unless you have an unlimited budget, so be prepared to make some trade-offs. Let your realtor know your absolute must-have features and what you're willing to compromise on. For example, let's say that you have older family members living with you. You may need a first floor bathroom and bedroom. Or let's say that you have small children. You may want to make sure that the bedrooms are not on the first floor while yours and your spouses are on the second floor, etc. I recently had clients who wanted to buy a single family home in Brookline because their children were already going to schools in Brookline. But unfortunately, the properties that they were looking for, like the single family homes, the prices were out of their range. They explored options in nearby areas and a little further out in the city, but they eventually locked out and ended up purchasing a home in Brookline that was within their budget. It wasn't a single family home, it was more like a townhome condominium type, but it fit their needs for the time being. Once you have found a property you are interested in, make sure to get an inspection in order to move forward with the next step in the purchase process. Prioritize location, school district, and commuting options so that those are essentially the most important parts of when you're looking to buy a property, so that you can find a property that meets your needs and fits your budget. I know I have provided a lot of information here today, and understandably so you may have some questions. Please feel free to keep questions coming by writing them in the chat. And also, we highly encourage you to schedule an appointment with one of the home loan experts.
And we are taking a lot of questions in the chat, so please be patient with us because it's a lot of information. And I want to give a special shout out to my colleagues, Terrence Bazil, as well as Migdalia Gomez, as well as Ryan. They are fielding a lot of the questions behind the scenes and working really, really hard. So now we're going to give it to you, Mike. It's about 20 minutes before the hour. So probably about 15 minutes. You can give us some more information regarding this process. Thank you, guys.
All right, thank you, Daisy. And your presentation set me up perfectly for this next slide. It says, I found a place, now what? Okay, can we go to the next slide? Okay, Daisy mentioned just a minute ago about building your team, and a loan originator, real estate agent, an attorney, and now it's time to put your team to work. So you've been out looking at properties, you've identified a property that you like and you want to make an offer on. So this is when it's time to work with your real estate agent. So you'll need to discuss with your real estate agent how much you want to offer. Your real estate agent will know the property well, they know the market, so they can advise you on how much you think you should offer. Quite often people do not offer the asking price, up front. So again, your agent can help you with that. So once you've come up with the price you want to offer, your agent will prepare what's called a document called an offer to purchase. Like a basic 1 or 2 page document that'll just have some of the basics: the purchase price, property address, buyer and seller, an estimated closing date. Now, it's very possible that when you make that initial offer, it may not be accepted, especially if you're offering less than the asking price. So hypothetically, if it's a $400,000 property you might offer 380. The seller might not want to accept it, but just know that they're not going to just flat out reject it and say sorry. You know, they will typically come back with some sort of counter offer. You know, maybe in that example, they come back at 390, 395, and hopefully you go back and forth and, you know, hopefully come to an agreement. Assuming your offer is accepted, you will be asked to provide what's called a good faith deposit. You'll make a deposit of $1,000, which is refundable. The offer will go through some contingencies. It's contingent upon you qualifying for a mortgage. I know you've been pre-approved already, but there's still, you know, a little more detail needed to, you know, finalize your approval. The property inspection, Daisy touched on it a minute ago. And if you were here yesterday, you heard the gentleman talking about it. I mean, that's highly recommended, but it's not required. But you'll have your if you have your inspection, and if you find there are some issues with the property, you have a few options. You can go back to the seller and have maybe renegotiate the price. Maybe they give you some sort of credit towards the closing costs. Or maybe you just decide to walk away, and you can do that. If you do that, you're going to get your deposit back. Another item that'll be on the offer will be subject to an appraisal, which the lender will do. The closing date, which that's the date that you're going to officially take ownership to the property. And generally that's somewhere, you know, around 45 days from when your offer is accepted. Assuming everything goes well, the next step is going to be to sign what's called a purchase and sales agreement, often referred to as a PNS. And this is where you want to bring in the next person as your attorney. Attorney is not required, you're not required to have an attorney, but it's highly recommended. Keep in mind, you're doing something you've never done before. It's a legal contract, and it's strongly recommended you get an attorney to review it, you know, before you sign it. The offer, the PNS, I should say, will be somewhere, you know, around 15 to 20 pages, and it will, you know, lack of a better term, dot the I's and cross the T's, have all the details. You know, as part of your offer, you may have come to an agreement on the seller leaving some things on the property, you know, maybe a washer and dryer, refrigerator, things like that. The details like that have to be in the agreement. You know, if they're not, then the seller is not obligated to. So you want to make sure that those things are all in the agreement. And again, your attorney will guide you through that. Next slide. Okay, so the next step is applying for a mortgage. And again, I know you've gone through the pre-approval process, but the pre-approval, you've submitted a basic application with not a lot of detail. We've asked you for just a limited amount of documentation based on what we provided. We know that you're a qualified buyer and issued the pre-approval letter, but there's still going to be more documentation we'll need from you. At the same time, when you submit the application, you're going to get what's called a loan estimate, which is going to be a breakdown of the closing costs. So in addition to your down payment, you're going to need funds for the closing costs, and that loan estimate will give you a pretty good idea of what your cost will be. When the application is submitted, your interest rate is going to be locked for 60 days. So, you know, if the rate sort of come down, unfortunately, you're somewhat limited in what your options are. There is an option to do a float down within the first 15 days if rates were to come down. But, you know, if let's say 2-3 weeks later, you see someone else has a lower rate, we're not in a position, to match that rate. So just know that, once you submitted, you're, quote unquote, locked in. Submitting the application, most people find it easiest to do it online. And if you see the picture to the right, you see that woman in front of her computer. I'm assuming that she's submitting an application right there. No, but seriously, most people, like to do it online. For whatever reason, if you're not comfortable doing it online, you want to do it in person, either we can help you, guide you through it on the phone, we can meet with you in person, whatever works for you and make the process, as smooth as possible. Okay. Next slide. Okay, so going through the mortgage process, after you've submitted your application, we're going to ask you for some documentation. Primarily, it's going to be pay stubs, W-2 forms, bank statements. If you have retirement accounts, we'll ask for copies of those statements. You'll be able to upload everything right to your portal. We'll make it very easy for you. At the same time, the lender will be ordering an appraisal, which again is different than the home inspection. The home inspection is looking at the property from a structural standpoint. The appraiser doesn't look at that. The appraiser is looking at the market value, based on similar properties in the area that have sold. So we have independent appraisal firms that we use. At the same time, we will have an attorney doing the title work on the property, and quite often we can use the same attorney that you use for the purchase and sales agreement, for more efficient for all parties if you're both able to use the same attorney. While all that's being done, there's going to be a loan processor that'll be working on your file. They're going to gather all the information from you. Once we have everything we need from you, we have the appraisal back, we'll issue your mortgage commitment. One thing I forgot to mention before with the purchase and sales agreement, it's going to have what's called a mortgage contingency date, which is the deadline by which your mortgage has to be approved. Generally, it's around 10 days prior to closing. And, it's the lender's responsibility to make sure that we meet your deadline. So when your file comes in and the loan processor, is setting it up, they're going to mark their calendar to make sure to see when your closing date is and make sure that it's done on time. That way, it's important for you knowing when your commitment date is. When we start asking for documents, you want to provide everything, on a timely basis, so that we'll be able to issue your commitment letter on time. At the same time, there's most likely your real estate agent and maybe the seller's agent are going to be, as you get closer to that contingency date, they're going to be contacting you and just finding out the status of your commitment. So it's probably a good idea, once you get the commitment letter, let your real estate agent know and, forward a copy to them, because that's, part of the buying process. When the commitment is issued, sometimes there might be a few additional items we need from you. We refer to as conditions. They should be minor. They might be things like an updated pay stub or an updated bank statement, things like that. Shouldn't be very, many. Once we have those additional items, then the next step is for the loan to be cleared to close. That means we have everything we need from you. There's nothing more that we need, and the underwriter will know let the attorney know that we're ready on our end, and the attorney can proceed with scheduling your closing. Daisy mentioned a minute ago, and I'll just reiterate about not applying for any new credit. Strongly recommended that from the time you apply until closing, hold off on applying for new credit. What'll happen is 2 or 3 days before closing, we're gonna get an updated credit report. If we see there's an inquiry from another company, we'll need to know, the details. If there's a new debt involved, we'll have to get the details. It'll have to go back to the underwriter to reevaluate the income. It doesn't happen very often, but if you can avoid it, it makes things easier. I have a new application I received earlier this week, and the gentleman mentioned to me, he says, I know I'm not supposed to apply for any new credit, but my wife and I are going to be buying a new car very shortly. And, I told him once he has it to send me a copy of the contract, and then we'll know about it and won't be surprised, at the end. Next slide, please. All right, so once your file has been cleared for closing, then it's time to prepare for closing, which, as I mentioned, that's the process. That's the way you're going to take ownership to the property. So the attorney will and the credit union together will provide what's called a closing disclosure. Once you get involved in the process, you'll hear it referred to as a CD. Now you already received a loan estimate, which is a breakdown of your closing costs. The closing disclosure will be a very similar document with a little bit more detail. Most importantly, it's going to give you the exact amount of the closing costs and the exact amount that you have to bring to closing. By federal law, it has to be given to you a minimum of 3 business days prior to closing. So just know that you're not going to get it and somebody just throw it in front of you and say, here, sign. It's done that way just to give you enough time to review it, to make sure you're comfortable with everything before you proceed with the next step. Just prior to closing, and most likely the day before, you're going to do a walkthrough. Now you looked at you saw the property when you made your offer, and most likely you haven't seen the property since then. So you want to go back to the property, make sure that it's in the condition that you're expecting. Make sure that the seller has removed all their belongings from the property. Any items that were supposed to be left, like let's say washer, dryer, refrigerator, if they were to be left, you want to make sure that those items, were there. Hopefully I can't say I've come across a problem with a walkthrough, but again, it's important, for you to do that and make sure everything is as it's supposed to be. Next. Okay, so just a roundup of the process. You're going to start with your express pre-approval, which is an application on the credit union's website. You'll get your pre-approval. Then you're going to proceed with working with real estate agents, looking at properties. Once you have your offer accepted, you'll have your accepted offer, you'll sign the purchase and sales agreement. You're going to submit your application, get your interest rate locked, you'll get your loan estimate, and then some other disclosure forms as well. You'll provide all the supporting documents to the lender. As I mentioned, pay stubs, W-2s, bank statements, things like that. Okay, next. Okay, so you submit all that documentation. As I mentioned, you have a loan processor. He or she will, review everything, organize the file. And once they've determined that we have everything we need from you, they will forward it to the underwriter to review. Now, I mentioned that mortgage contingency date. We're not necessarily going to wait right until that date to issue your commitment letter. And if you've given, if we have all the documents, well in advance, we'll gladly go ahead and approve your loan. So the loan is approved, you will get what's called a commitment letter, which is just the formal name of the document showing your loan's approved. It'll have all the details, the loan amount, term, like 30 years, interest rate, etc. Mentioned before, the closing instructions, the underwriter rather, will issue instructions to the attorney, letting them know we're ready to proceed. You'll get your closing disclosure, and we will re-verify your credit. As I mentioned before, one other item is we will also, a couple of days before closing, verify your employment. We will ask you for a contact person at your employer, and just a couple of days before closing, we will call them and just verify, that so-and-so is still employed there. That's all we're asking for. We're not asking for, salary information. Basically, we want to just make sure that you're still employed there. Okay. Next, please. Daisy and Dominique earlier, mentioned all the different products that the credit union offers, as far as home loans, other banking products. As far as the mortgage process, I just want to emphasize that it can be a bit challenging. I don't want to use the word stressful. It can be a challenging process. However, at the end, you're going to find it to be very rewarding. You're doing something you've never done before. Just know you're not alone. You hire a team to work with you, and everybody will do their job, guide you through the process. And especially with the credit union, the originators, the 5 of us, we're going to be there right from start to finish. So just because we issue a pre-approval, that doesn't mean we're done. We'll be there along the way. There's going to be times where you need us. You may need a revised pre-approval letter, or you may have questions. We're available at night, weekends. So please, don't hesitate to contact us. Don't think, well, it's 7 o'clock at night. I can't call them. I don't want to say 24/7, but we're pretty close. Just recently, I remember issuing a revised pre-approval during the Super Bowl. So
That's right. We'll hold your hand throughout the
Yeah,
entire process.
exactly.
And
Yes.
we also check the chat. Like I said, Terrence and McDahlia in the background, as well as Ryan, have been putting a lot of the links in the chat. So we're going to take a few questions, and I'm going to jump back in so I can wrap it up for people who need to log off at 1 o'clock. So one of the main questions we have right now is, I heard that down payment should start at 20%. Is this true, or it would depend on your credit? Anyone can answer that.
Okay. In a perfect world, yeah, 20% is desired, but many years ago it had to be 20% or nothing. 20% you'll avoid having the mortgage insurance, but if you have the 20%, you may not want to use it all. You might decide that you only want to put down 10%. You want to save funds to do work on the property. You want to just keep some money in savings. It's really up to you. But it won't affect your interest rate. You won't pay a higher interest rate for a lower down payment.
Okay, someone also asked, can you apply for pre-approval with a non-married partner?
Absolutely. So for the mortgage process, you can have typically up to 4 people as part of the mortgage application. So you can apply with whomever you want. Depending on the loan product that you choose as well, you may be able to have what is called a non-occupant borrower, which acts similar as a co-signer would act if you were applying for like a consumer, or like a personal loan or vehicle loan.
Okay, for those of you who have to log on, I just wanted to remind you, in addition to Michael, Daisy, and Ryan, we have other loan originators who are here to help you. They will be on tomorrow as well to kind of continue this whole journey to home buying. We are here until about 1:30, so you can stick around. We want to answer all of your questions to make sure that you have all of the information that you need. I wanted to also remind you that we have a survey. We're putting that in the chat for you. That is huecu.org/survey. So please take the survey. Let us know how we did. Also wanted to remind you, we are just giving you tips. Of course, everything is individual. We don't know exactly what your situation is. So definitely get in contact with your financial advisor and they can let you know what works for you. And also tomorrow we have Affordable Path to Home Ownership that will conclude our week of the home buying forum. And so join us if you're able to. And of course, it's being recorded so you can watch it on our YouTube channel and stay in touch with us. If there's a question you want to let us know we didn't answer, you need to log off really quickly at myhuecu.org and visit the website. So thank you so much for joining us. Those of you who have to log off at 1 o'clock, we will stay on and continue on until about 1:30. So now our next question. I do not have a credit card, but I have a credit due to my student loans. Don't we all? Do I stand a chance to be approved for a loan? And that can be any of you to answer that question. Thank you.
Yeah, if you don't have quote unquote traditional credit, the type of items that'll show up on a credit report, like loans, credit cards, we will then look for what's called alternative credit. Things like rent payments. We would go ask you to provide maybe 12 months of canceled checks to show a satisfactory payment history on your rent. Things like utilities, electric, cable, phone, things like that. So as long as you can provide other sources, we should be okay.
All right, there's another one. I'm a member, but living in New York. Is it possible to obtain a mortgage through HUECU for home purchase outside of New England?
Not at this time. I mean, in the near future, we're looking to expand, but as of right now, we only have license to finance in New England.
All right. What counts as significant purchases?
Well, we're going to look at significant purchases. Again, we're going to get a credit report, updated report prior to closing. And then chances are, if you have a new purchase, we're going to have to look at that monthly payment. Mm-hmm. So let's say you've got a new car and you got a $300 a month payment. That'll have to get factored into your income. If you've just taken out a credit card and you got a couple of $100 balance, that's not going to be an issue.
Okay. Someone said, if you don't have 2 years at a job, they put in quotes, I moved and just passed the 1-year mark at my current job. Should you postpone buying a home until after the 2nd year tax return is filed? And how do people who haven't had a job in 2 years buy a house? Well, that's really 3 questions. And do you need a huge down payment?
So when we look at income, if you were, let's say that you were in school prior to starting a job, if your employer is like a full-time W-2 employer, you don't have to wait 2 years. The 2-year rule only really applies when it's other sources of income that are not considered quote unquote regular. So self-employment, like if you have like 1099, like a gig work, or like you started your own business, etc. Or if you're thinking of using like bonus income. So anything that's not regular, we will need to see a 2-year history of it. But if it's, let's say you started, like you were doing something prior to starting to work on at a W-2 full-time employment, then we could use it right away. We just need to see that you were like basically the record, whether you graduated from school recently, etc., in order to use that income. And so you don't have to necessarily put a larger down payment. As Michael mentioned earlier, 20% down payment, if you can afford it and you are able to do it, that would be great because you don't have to pay for the private mortgage insurance, but it doesn't necessarily a requirement.
All right. And along those same lines, someone put attach to that person's question a job length. I've been at Harvard for 8 years, but my husband has only been at his job for 1 year. Does that affect our chances?
So again, so it depends on what your husband was doing. So if he was working at another job or even in school, and the new job that he's working at is a full-time W-2 employment, then that should be fine as well.
All right. How does gifting work? What if you get a gift for a down payment from a family member?
We see that all the time, especially in a market like this where you need significant amounts for down payment.
Mhm.
Gifting is fine as long it has to be from an immediate relative, parent or sibling. They will be asked to sign what's called a gift letter, stating that they are giving you a gift of X amount towards the purchase of a home. We will want to see proof of where their funds came from, see proof of you depositing the funds. In some cases, there could be, tax implications on a gift. So we always tell people, just make sure you get some professional advice, when you're getting a gift. But it's very common. We see quite a bit of it.
All right. What documents are you going to say something, Ryan? Oh, okay, sorry. What documents are needed for mortgage loan application, and what will be extra from the pre-approval?
So at the time of pre-approval, we're going to check credit. It's going to be a high inquiry on your credit. And we're also going to verify income. You can add more documents if you want to have a review, like there's different levels. Once you have found a property, that's when we're going to ask for more information, such as information on your assets, where the down payment is coming from. And we're also going to further verify your income and further look at your credit, etc.
All right. What if I have a personal loan from HUECU?
Well, what we're going to do when we, part of the process in evaluating an application, we look at your income. We look at what's called the debt ratio. So we look at your total monthly payments, anything you have right now, credit cards, plus your housing payment. Look at that this is something Daisy touched on, as a percentage of your monthly income. That's what's called the debt ratio. So that'll be part, of the debt ratio calculation. As long as you're under that 43%, you're fine. I think some people think, oh my God, I have a couple of credit cards, I have a loan, I better pay them off. Just because you have, a monthly payment or some monthly payments, not necessarily gonna preclude you from qualifying.
Who attends the walkthrough offer other than the buyers?
So typically for the walkthrough, that's something you do with your agent. So your agent will be the person coordinating the scheduling of the walkthrough, so you can go look at the property. And when you look at the property, you want to essentially see that the property is clean. It doesn't have to necessarily be professionally clean, but you want to make sure that everything that you saw when you made the offer is in the property. So if you saw a chandelier or whatever, like the toilet, etc., whatever you saw when you made the offer for the property, that's what you want to see when you go look at the property again as part of the final walkthrough.
Okay. Does a monthly PMI payment apply for the entire duration of the mortgage, or does it go away after a certain amount of time / amount paid? Ryan? You're on mute.
Oh, I'm sorry. I was answering something in the chat there.
Oh, okay.
Could you repeat that? I'm so sorry. I was typing.
I can
Okay.
Okay, the mortgage insurance is required when you're putting down less than 20%. However, to have the insurance canceled by federal law, a lender is required to cancel it once you establish 22% equity in the property. However, if you're in a situation where you're able to pay down your loan, the lender may be able to do it. They may, they would probably ask you for an appraisal, but to get an appraisal done. but it won't be there for the life of the loan.
All right, thank you, Mike. Do I have to use a certain HUECU or just the one in Cambridge? I think I can answer that. We have several different locations. They don't necessarily have to come to Cambridge. Am I correct? They can also go to LMA, which is our new branch near the Longwood Medical Center. So our mortgage loan originators are pretty much at every location. You can just contact any of them and they'll be more than happy to assist you. All right. How much does a refinancing for a better interest rate, hopefully one day, will cost?
So when it comes to closing costs, most of the costs depend on the attorney that handles the transaction. And the costs are basically determined by the type of property that you are financing, the loan amount, the city and county of where the property is located, etc.
Mm-hmm.
So we won't be able to give you like an estimate unless we have that other information to give you like a very, very rough estimate. But ultimately, the closing costs are determined by the closing attorney that is assigned to the transaction.
All right. Thank you so much, Daisy. Everyone, please keep those questions coming in the Q&A. Really helpful to just other people who may be too shy to ask the question. So we appreciate it. Our next question, I have a W-2 employment, but my partner is currently finishing school and will likely be employed in a few months and has no credit history. Should I include my partner on the mortgage? Are there any financial advantages?
You can include, this person can include their partner. The partner doesn't have any income to contribute towards the application. It's possible that the person may have, if the person has a good credit history, that's fine. If they have some debt, it's possible that, that might take away from their the other person qualifying. My suggestion would be, in that case, have them be on the application, once it's submitted. If we see they might qualify better without the other person, we'll let you know and maybe delete that person, from the application.
All right. So my wife and I are just starting our research into a home buying process. So we don't want to get a pre-approval just yet. I've heard that a pre-qualification can help give an idea of our borrowing power without a hard pull on our credit. Does HUECU do pre-qualifications, and how close are they compared to what a pre-approval will be?
So yeah, absolutely. We do pre-qualifications. How close it will be to what the actual pre-approval is based on the information you tell us.
Mm-hmm.
So once we do the pre-approval, we're going to verify everything, check credit, etc. So if you tell us if the information you tell us is pretty close to what we verify, then it'll be a very close match. But if you omit some information, then obviously, once we verify it, if the amount that we verify is higher for like debt, etc., then it's not going to be a close match. So it all depends on what you say to us once we're going through the process of a pre-qualification. Because again, the pre-qualification is a conversation we're having with you about what your liabilities are, like your debt, and what your income is, etc.
All right, keep the questions coming. Understanding the debt ratio of 43%, I assume that counts debts you have outstanding in addition to your mortgage payment. That's one of the questions we have.
It'll be typically, the way you describe items that'll show up on a credit report. So any loans, credit cards, things like telephone, cell phone payments or utilities, those do not count. So again, basically just the items that are on your credit report.
All right. What if I have a rental property? Is this a good thing that will kind of help you or hurt you?
It all depends on the income that you're getting from the rental property and the expenses, and also what your deduct on your taxes when you're claiming your rental property. So typically we're able to take into account like any depreciation of the property, any principal, interest, property taxes, if the property is a condominium, the condo fee. But if you have, let's say that you have like an Airbnb where you deduct utilities, we may not be able to take that into account. So that will reduce the amount that we can use for income for the property.
Thank you, Daisy. Just keep the questions coming. Again, we have a lot of the links in the chat for all of you, especially if you would like to still continue and join us tomorrow for the fourth day of the Home Buying Forum. And wanted to say a good thank you and shout out especially to Terrence and Migdalia in the background, fielding all the questions, as well as you, Ryan. Really, really appreciate it.
I'll second that.
Thank you to Mike and Daisy as well.
And thank you, Dominique, as well.
Thank you for everybody attended. Thank you,
Yes.
everybody.
Yes, and thank you to all of you for spending yet another afternoon with us. Tomorrow we'll have more information for all of you. Please join us. We're looking forward to seeing you and really helping you through this process, and we will be holding your hands. That's why we're here. And thank you so much for being a part of HUECU. Have a great afternoon, everyone.